You've heard the phrase set it and forget it a million times, right? It's like the holy grail of personal finance. But let's be honest, for most people, it's a strategy built on, well, hope. You shovel money into a 401k, maybe a mutual fund, you cross your fingers, and you just hope that 30 years from now, it all worked out. Well, today, we are going to blow that idea up. We're going to completely redefine it. We're going to turn set it and forget it from a passive, wishy-washy hope into an active, automated system that puts you, yes, you, in total control of your financial future. So here's how we're going to get there. First, we'll bust the big automation myth. Then, we're going to get our hands dirty building your personal financial blueprint and picking out the right tools for the job. From there, it's all about building a cash flow engine, automating your safety net, and finally, we'll unveil the new and, frankly, the only set it and forget it that actually works. All right, let's dive right in. Look, that traditional hands-off promise, it sounds amazing, doesn't it? Who wouldn't want their money to just magically grow while they're off living their life? The problem is this whole approach is built on some really shaky foundations that can leave your financial future completely exposed to chance. And that really is the question you have to ask yourself. When you just toss your money into a generic portfolio and hope for the best, are you really in control, or are you just a passenger? You're essentially betting that the next 30 years will be smooth sailing. But we all know markets can be crazy. You can hit what they call a decade of nothing, where your investments literally go nowhere for 10 years, all while you're still paying fees to a manager who's basically just hoping right along with you. You're not investing, you're just outsourcing hope. This right here really lays it all out. On the left, you've got what we'll call boilerplate investing. It's what most people are sold, it's totally hope-based, it just tries to copy the market, and you have zero control. And it can lead to that decade of nothing. But on the right, that's blueprint investing. This is a whole different ballgame. It's rule-based, not hope-based. It's about strategically building wealth, giving you total control, and, this is key, it's designed to create consistent cash flow. So how do we get off that boilerplate path and onto the blueprint path? Well, it all starts with building a solid foundation. And listen, this has nothing to do with picking hot stocks. This is about creating your personal policy for wealth, a set of rules that's going to guide every single financial move you make from here on out. Just let that sink in for a second. Your personal policy tells you your future. That is so powerful. Instead of freaking out every time the market has a bad day, you operate from your own playbook. You know, it's crazy, but most people spend way more time planning a 2-week vacation than they do planning their entire financial future. A blueprint forces you to hit pause and actually design the life you want to live. And your blueprint? It all comes down to actively managing these 6 numbers. It's really that simple. Instead of just staring at your portfolio value going up and down, you're in the driver's seat, making conscious decisions about where these numbers go. You work to increase your income. You find ways to cut down your liabilities, paying off debt. You focus on buying assets, things that actually put money in your pocket. And when you get that right, guess what? Your cash flow and your net worth, they can't help but go up. If you want to change your wealth, you have to change these numbers, period. Okay, so once you've got your blueprint, your master plan, you need the right tools to actually make it happen. It's just like driving a car, right? You can have a destination plugged into your GPS, but if you don't have a steering wheel or pedals, well, you're not going anywhere. The same is absolutely true for investing like a professional. And this table breaks down the 2 tools you absolutely need. First, your broker's account. That's just for executing the trades. Think of it as the car's ignition and the pedals. It's what makes the thing go. But the professional software, now that is your GPS and your entire dashboard. That's what gives you the data to make smart decisions, to analyze where you are, to scan for the best opportunities, and to model out the risks before you even put the car in drive. And this brings us to a really critical point. You have to be willing to invest in your own toolkit. Don't be cheap here. When we're talking about your financial future, you want the best instruments you can get. Seriously, think of it this way. This is not an expense. It's an investment in your own skills, your own capabilities. Like the quote says, it's not about price, it is all about value. And this is how that software gives you real leverage. First, it automates the search. You can scan thousands of stocks in just a few seconds to find the handful that actually fit your personal blueprint. It's like finding a needle in a haystack, instantly. Second, you can analyze a company's financial health in a heartbeat. We're talking sales, profits, debt. Is this a solid business, or is it the next blockbuster video? The software tells you.
And third, you can model a potential trade, see the risk graphs, and know exactly what you stand to gain or lose before you ever put a single dollar on the line. All right, we have our blueprint, we have our pro-level tools. Now it's time to build the heart of the whole system, the cash flow engine. This is where we make a huge shift in our thinking. We stop hoping for prices to go up, and we get into the business of generating income. We're going to design a portfolio that is built from the ground up to pay you. And one of the simplest, most powerful ways to do this is with a strategy called the covered call. Honestly, the best way to think about it is like you're a landlord for your stocks. You own an asset, in this case, 100 shares of a stock. You then agree to rent it out for a period of time, and in return, you get paid an immediate cash payment. It's called a premium. It's literally like collecting rent on a property you own. Now check this out, because this case study shows you just how powerful this is. Over a full year, the underlying asset, an S&P 500 fund, it actually went down in value. So in a normal buy and hope portfolio, that means you lost money. Simple as that. But by using this cash flow strategy, this portfolio generated positive income month after month after month. Just think about that for a second. In a year where a typical investor would have been panicking looking at their statement, this strategy was just methodically churning out cash. It proves that your income doesn't have to depend on the market going up. Now that is true control.
And here's the bottom line. That consistent cash flow translated into an average annualized return of 24%. And that wasn't from some crazy high-risk bet on a meme stock. That was from systematically generating income on a boring old index fund that was flat to down. It just shows you what's possible when you shift your focus from price to cash flow. Look, a system is totally incomplete without protection. Making money is great, but it's only half the battle. A truly automated system has to have an automated safety net to protect your money when, not if, but when things go wrong.
So to build that net, you have to define these 5 things for every single position you enter before you ever click the buy button. You need a target, where you'll take your profit. You need an entry, a good reason for getting in. And most important of all, you need an exit, where you cut a loss, no questions asked. Defining your risk and your potential reward up front forces you to make sure the trade is even worth it. If you have this plan, you will never ever be stuck wondering what to do. This analogy is just perfect. You can't control the stock market. You can't control what some big bank is going to do or what a politician says. That's the Titanic. It's huge, it's powerful, and it might go down. But what you can control 100% is whether or not you get on that ship without a lifeboat. You can control your own rules, your own preparation.
And that's exactly what your pre-planned exit strategy is. It is your lifeboat. It is the automated, non-negotiable rule that gets you off the ship before it hits the iceberg. It's what prevents a small, acceptable loss from turning into a catastrophic, portfolio-crushing disaster. It's your automated protection. You have to have it. So let's bring it all together. We've busted the old myth. We've built a personal blueprint. We've gathered our pro-level tools. We've designed an engine that generates cash. And we've automated our safety net. We are now, finally, ready to redefine set it and forget it on our own terms. And this slide says it all. This is the big takeaway. The old way, you set up some boilerplate fund and you try to forget about it, which, as we've said, is really just hoping. The new way, the real set it and forget it, is where you set your personal blueprint, you set your rules for entry and exit, you set your system in motion, and then you get to forget the daily market noise. You don't forget your investments. You forget the panic, you forget the hype, because you have a system of control. And at the end of the day, it all boils down to this mindset shift. Real financial freedom isn't about buying some magic product or finding a secret stock tip. It's about your own education. In a world that changes as fast as ours does, your financial education is, without a doubt, the most valuable asset you will ever own. Knowledge is what lets you build a system that works for you, no matter what the market is doing. So I'm going to leave you with this one final thought. Take a good, hard look at your own investments, your 401k, your brokerage accounts, and ask yourself this simple question. Is my portfolio actually designed to pay me, or am I just paying into my portfolio hoping that someday it'll be worth more? The answer to that question might just change everything.